And to be honest, I have an editing team that will cut out everything that you want to say in between, or if there's something you don't want to be put in there, you let me know as well, man.
I
But
mean,
I'm really glad.
if you have your team, I can send you a background so you can use it right on the back.
Your background's perfect.
That's fine. Good.
It's perfect, man. You've been in the startup world for a long time with real exits, impacts, and you're still building really hard, right? I wanted to ask you just to start this off. What's something that's really energizing you right now, either in equity match or just in life generally?
First of all, thank you so much for having me. I mean, if you are an entrepreneur, never is enough, right? Let's start in this way. So you start your first, second, third. If you're lucky, you sell, or if you're even more lucky, you scale to buy others. But at the same time, as I said before, even if you've done five, six, for you, you're still at the beginning. So you do the seventh, eight. The motivation is actually having the appetite to do always something more. And if you are a tech entrepreneur, for example, or whatever, you maybe want to fix some problems that today we have so many. So you can fix one problem a day, maybe. But at the same time, it's about you, right? You must be honest with yourself. Yes, an entrepreneur, you must have a big ego. So which means for you, you must always go ahead. Yeah, I mean, motivation, that's the kind of things that motivate me. I wake up in the morning and I'm very happy. I've done already probably 57 years of entrepreneurship. But for me, every day it's a new day, it's a new challenge, and I take it without any problem. Some days are good, some days are bad, because when you start up any company, if you're 20 or 50, I can assure you, it's more challenging when you're 50 than when you're 20.
Right, the earlier the better, man. And with that, I want to take a little bit back. I know you've got other companies that you've also started, but we'll talk about equity match for a little bit. How did that idea come about, and what problems were you trying to solve when making it?
Equity Match was written in 2018, a week before Christmas. So I was in London, the city, because I have my mini boutique, and we buy and sell companies, and we merge them. So, and I said, I'm going to do my last startup, because Equity Match anyway will be the last, because after I want to spend my time investing. The proposition was working with all these funders, having them struggling so much to raise funds, and having seen so many platforms they claim to raise money, but they are absolutely, I mean, it's a nightmare. You get there and maybe you don't raise even a pound. But also, raising money actually is not the drama. Yes, few startups can raise money. I do believe if you have a good value proposition, good problem to solve, the right solution, you raise money in any condition, any market, any depression. But the point is, it's not about only money. Founders don't need just money, right? You can have endless money, but if your team is not good, you just don't go anywhere. If your idea is not right, you don't go anywhere. If your execution, which is the most important thing, is not correct, you don't go anywhere. Funders need an environment where they can thrive, not only because they find the money, but because they find the mentors, the advisors, the co-founders, but also then you can teach them how to start, scale, and exit, how to start scaling IPO, how to start scaling and maybe acquiring other companies. They need a TV channel as we are creating, where you can talk anytime, as we are doing now, H24, 7 to 7. They need an academy where they can study, understand the mentoring, all this kind of stuff. So we ended up to write Equity Match. We did the first version was launched in June 2021, and after we launched few months ago the second version, which is doing very well. It's an MVP now we are developing, and we are working hard to reach 1 million users by the end of 2027. We already,
Wow.
the companies, the startup already start generating a few revenues. But the ultimate goal of Equity Match is a networking, social, and media, because we focus also on media. We already have our YouTube channel, which is doing extraordinary well. We have done already more than 200 pitch events live, streaming live, more than 400 podcasts. So we are very focused on media as well. But at the same time, we want to create a platform where funders actually can go, as they can invest in them, syndicate, and they can run due diligence, they can sign the term sheet, sign the contract, and invest. At the same time, they can also disinvest on the secondary market. This is the big picture of Equity Match. Won't be done tomorrow. We started MVP live. You can check it's working pretty well. But we have in front of us over 36 months of full development to reach what I was just stressing before. Equity match is my last one. I always wanted to create something very strong for funders, less talk and more action. I'm very keen to support funders in Europe because I do believe Europeans are left behind with the myth of the Americans. All the Europeans move to America, not because they like to live in America, because, I mean, I don't think there is best place to live than Europe, but because we don't have the means. I mean, actually, we have the means, but we don't use them, right? So try to learn. For example, we are opening, maybe, I'm not sure, but probably we will, an accelerator in Malta, the first one, brick and mortar. So then we want to help angels to understand how to invest in startup. So this massive risk averse that there is today in the venture capital market, where the angel invest, for example, they mistakenly take 30-40% of the company with 50K, you already killed the project day one. They must understand that if you take 10%, it's much better if you take 30, 40, 50, because nobody will come after you, and so you will die with the founders. So all these basic rules, and of course all the rest, you must teach them. At the same time, you must teach them that investing in startup, yes, it's extraordinarily risky, but at the same time, you can make an extraordinary reward in terms of return. So maybe you have 2 real estate, which means risk is pretty low. And after you can combine with a couple of startups where risk is pretty high. One scenario, startup will fail, but you still make money with real estate. The scenario, you get 10 times more. So this is equity match. I mean, it's a long journey. We get started. We are doing very, very well. We already had 500,000. We're raising another 500,000 now, and we keep going.
Yeah, no, I had a question actually. So on that question you were saying about founders, because you've raised over 250 million pounds in your career. So what kind of things do founders get wrong at the early stages that will prevent them or throw obstacles in the way for being able to accumulate that much?
What do you mean? What prevent founder for scaling the company?
Let's say we've got a early stage funder. What kind of things do they get wrong about the process when starting?
I mean, I believe founders, the first time founders, they love too much what they do and they care very little about the market. So they spend maybe 12, 24 months doing something they really like and trying to fix a problem that they believe is there, but maybe the market doesn't. So that's the biggest problem they have, right? I always say to them, don't do too much. Create an MVP that makes sense, right? That gives the idea of what you want to give to the market, the service you want to deliver. Go to the market, go. Don't spend a million, spend 20K, 30K, go. And after the market will tell you, don't do anything because what you're doing is rubbish. We don't need this. What's the point to go ahead? But if you don't test the market, if you don't find your market fit and you keep going, the money will finish and you need to close. That's all. That's the biggest mistake, in my opinion, they do. The second is I mean, it's a different story when you start a startup and bootstrapping with a business model can actually go without having external funding. When you start a startup, when you actually can't do anything without a million in the first place to start building your startup. So in the second time, later, if you build something that requires so much money, you need to start very, very early. So start talking idea stage to investors. I actually want to do this. What do you think? It's something that makes sense. Are you willing to back up me with 50K, 100K? And so the journey of raising money is very complicated. Very few people raise money, the others, they don't. So you need to prepare yourself very early to raise money, educate yourself how to do so. That's what they don't, many founders, they don't. They just random send emails, 1,000 emails per day, with pure automation, and the result is zero. And the last thing is funders must understand that of course, they need to know what they're doing, but they need to ask the market. That's all, period. Market is king, and they can do whatever they want. And the biggest mistake, but this comes because you're not that knowledge, right? When you're your first startup, the majority of tech funders are tech guys. So very good in technology, very little good in management. So they must understand the company, whatever it is, run on cash flow. And cash flow is binary talking, it's your account. You must go to your bank account. That's what means cash flow, right? In a very literal word. So if you don't know how to manage cash, there's no way we succeed. Nobody will give you the money. If you don't know how to execute your plan, again, So I believe founders at the very, very early stage, they must find one, two, no more mentors that they can help them during the way for the first 12, 24 months. Just do not repeat the mistakes that other millions of people did already. What's the point to make the same mistake, right? There are many, many, many mistakes. I did myself, too many. So you must be big-headed enough, but at the same time, you need to listen to people. You need to listen who knows better than you, and so on. But again, I believe in Europe there are plenty of good founders, but the lack of rules, pro founders or pro entrepreneurs, the lack of funding, the risk averse of the Europe just killed them. They won.
No, yeah, that makes complete sense, and there needs to, well, like you are doing, is bridging the gap, right? It is a bit of a different question, but in terms of for you, what part of the work that you're doing right now do you enjoy the most? Is it the building the tech, creating the deals, or kind of just even mentoring founders into understanding the right process?
I don't mentor founders because I don't have time.
Okay.
Very, very little or nothing now. Now, I'm not a tech guy, I'm an entrepreneur. So, Equity Match is my first very tech startup. So, my CTO is the one who does job in terms of technology. So, I spend my time developing the business, talking to the people, doing a lot of PR, as CEO must do. CEO are there to bring things together, give the vision to the company, and let them understand how to execute. But you're not the one who's going to execute it, because if you're the CEO, you are executing everything by your own, you won't go anywhere. Yes, the first time you had to do, at the very beginning, you probably be the CEO, the CTO, whatever it is. If you're good in tech, again, tech is not my sphere of competence, so I leave the others to do so. But PS CEO, cool. Talking about CEO for a startup is pretty ridiculous, right? Company, maybe 3-4 people. But Equity Match has already 32 people working full time. It's already, even though it's almost pre-revenue, we already have enough people on board. And now it's easier because, with all the tech involved, supporting AI, you don't need too many hats today. I mean, you can count on 10, 50 people already. You can create in tech a billion company easily. But I
Yeah,
enjoy talking, enjoy vision, enjoy executing, and leave the
you
other
like
to do.
to, yeah, lead from the front.
Yeah.
It brings me on to the next part of this where I'm kind of going to ask a few questions about the industry. Now, just to begin, talking about investors. Now, you've been in the industry for a while, so I'm trying to understand, are investors being more selective now? And if so, for founders that are watching this and do watch this, what are they really looking for?
I mean, investors today, I don't have the right number, but I think each investor today, at least you find 1,000 founders probably. If not 1,000, close to big. In a city proportion, there is no ratio, right? It's very funders adverse when it comes to ratio. Now, if you're a funder, you need to find investors. You must have very, very clear in your mind, a clean in your talk what you're doing. When you go pitch to investors, of course are selective because they can be selective because they receive 2, 3, 4, 5,000 deck per year. They invest in 10. Can you believe? You receive 5,000 and you invest in 10, maybe 15. 15, it's a big number already. So investor must be selective. Founders must be selective as well. So when you get an investor on board at the very beginning as a founder, the first thing you must do your own due diligence on the investors. Because if wrong investors day one, you are dead. The second is they must understand that investors give them the money. Money does grow on the tree for
If you don't
free,
mind
so they
me,
work from there.
I'm just back to that point. Can you explain why a little bit? So why is a wrong investor the wrong investment from the founder's perspective as well?
Say again?
So why is from the founder's perspective the wrong investor is a
Crucial.
wrong
It's
investment?
crucial. Many founders, they make a massive mistake, which is 100% you pay after. So because you are starving for money, because you can't wait to get this money in to start, you accept any kind of money, right? So if I'm investing in your company and they tell you know what, regardless your valuation, because we don't care, that's your valuation, but I give you my valuation because I'm the one who's going to give you the money. For me, I give you 100K and you give me 30% of the company, right? So first of all, I'm giving you 30% of the company, 100K, 350K more or less post-money valuation, which is ridiculous. But if it can be. The problem is not the valuation. The problem is I took already 30% of your company. And after that, they comes after me and say, you know what, Abi, how much do you have left? I left 70%. How much you need? I need another 250. All right, give me another 20% to me, or maybe 25.
Yeah,
You lost already the company. So it's done, it's finished. Nobody's coming because a
they
founder
eat the
that
company. Yeah,
does hold the majority is useless because your commitment will go down. And then when you raise the money, you need to understand that other people are coming after unless you are cash positive at the very beginning, which is very rare. So you need to give space to them to work in. You must prepare at day one. If they don't have space to work in, nobody will work in, so you die, even though you got 20 to 300K before. And also, you need to have your own due diligence because if you get the wrong guy who bothers you every day, is telling you what to do and change your view and your perspective of the business, and even your road, I mean, again, it's wrong. It's totally wrong. So funders, in the last but absolutely not the least, is reputation. You must see who are these people because if you get the money, people they are not well, they don't have a well reputation, others won't join. Nobody's going to join someone in the cap table they don't like, all right? So all these things works in this way on the venture perspective, okay? So when I come to you, I say, okay, how much do you have? Oh, you have 80% of the company. That's good. How much did you raise already? I raised 400K. That's very good. We still have a lot of shares to give to grow without losing the 51%. Now, when it comes to percentage, if you had, you can still have 20% of the company, but still holding the majority rights on voting. That's what matters, right? But all this stuff, all these things, unless you have been doing it for a while, you don't know.
yeah,
Doing due diligence on investors is extraordinarily important, as investor will do their due diligence to you, of course.
no, no, that's a really good point.
It comes. You don't have hours to talk. So when you have your deck must be short, very clear, bright as little as possible. You use images and communication is very straightforward. Tell them what the problem we are trying to tackle. What's the solution? Why your solution is better than others? What is the market? How big is the market? And how you do fit into the market? And if you already have a market fit, show them your KPIs. If you don't have, tell them how to do so. They will do the homework and they will tell you it's right or not. But there are very few startups that they can break the ice day one at the very beginning. Many of them they don't. Some of them they get the first call, maybe don't go to the second call. But you must be clear in what you are delivering and clean how you deliver.
Understood. Yeah, precise, concise.
So
Yeah, and because
it.
the gap that's missing is will be the decider to if you get funding or not. Awesome. That brings me on to the next question. In terms of we've got the investors and we have the founders. Now, from what you've seen in the market, do you think something's missing in the way that capital is matched right now between in terms of asymmetric information or there being not enough support?
I mean, as I said before, the number of startups in, let's talk about Europe, right? The number of startups in UK and Europe is very high. The quality of the funders is very high. The quality of the cash is very high. So in terms of funding, it's everything there. The only thing that funders are missing today, and this is not their fault, but comes to education, is thinking big, very big. So if you are going to a US-based investor, which is US invented venture capital, right? They will tell you, all right, how do you make this company 1 billion? Full stop. If you come to the Europeans, they will tell you, how do I exit? How do I make 4x, 5x? What kind of question is this? Doesn't make any sense, right? So why? Because first of all, you can't invest in a company. I never did in my life. I mean, you don't go to a fund that tell me, okay, how do you exit? So when you work into the company, you must think for the company, for yourself anymore. So if I'm giving the money to you, I'm supporting you. So I'm not bothering you, I need to exit, right? Especially when it comes to angel investors. I need to support you. And the question is, I do grow this company to 100 million or 1 billion in valuations, automatically I might exit. So the mindset European investors have, especially in the very early stage angels, is wrong to me. This is a very bad thing for the funders. The other thing, funders on the funder side, they must be helped with a lot more regulation. Sorry, a lot more or less regulation because we are too much regulated. A much more combined market where you can sell in UK as you sell in Brussels or you sell in Italy without changing too much. Startup today in Europe, they spend more money for GDPR than for building the tech. So which it doesn't make any sense, right? And also the one of the biggest problem we have today is a risk-averse society. The amount of billions sitting in the account in Europe is massive. The point is, in Europe, insurance companies, they do not or they cannot invest. A pension fund, they cannot invest. Endowments, for what they are, or university fund, they don't invest because the risk is too high. So all this kind of stuff. And the last thing we have is we are too much focused on government support, very little on price support. So until the venture capital is driven by by state and not by private individuals, private companies, private money, we will never go anywhere. Forget. This is those are the main problems. The problems are
What do you
countless.
think stopping that driver?
So again,
What do you think stopping that driver of price power being a main, let's call it a main reason to do it? Incentive.
missed. It's about culture, right? We are not there yet in investing in startup. So if you have 200K, you prefer to buy a house that give you 200K fund, right? Because let's be honest,
Yeah,
the risk is very, very high. The risk is 90% those money will be lost. So
yeah,
there is not that much wealth in Europe per capita because it's not, period. Europe is not, it's a wealthy society, but per individuals it's not.
yeah,
There is not that much wealth to be given, right? If anyone can give 5,000 per month to startups, would be a different story, but the money are not there. And also the problem is that not having a pro-risk approach does match with the venture capital at all. Match with bond, match with I don't know, just bond. You can buy
yeah.
on
It's something
bond.
low risk.
So it take a while for Europe. This is why you have so much. You have more money coming from the state than coming from the private sector. And the money coming from the private sector, never forget that if you set up a fund, many times you raise 10 million, 10 million comes from the state in any way, because come from the European fund and so on and so forth. So it's a long way to go. Changing culture needs decades, not months. So it will take a while. We take a very long time to change. Maybe we can match. I mean, we need another 20 years to match US in any terms, if we can. So the culture is just too different, and maybe we can match China, but China is a different story. China it's a different model that we can't cope with it. Zero.
Yeah,
Another society.
superpower to some extent.
I mean, another society. I admire. I mean, I have to be honest. The capacity of tech startups in China is astonishing. It's astonishing. The quality of the technology of this guy is unbelievable. If you take DeepSeek with 10 million, they did what ChatGPT does with 100 billion. Sorry, with 10 billion. Look at the EV cars. I mean, they smashed Tesla. They simply smashed Tesla. And Elon Musk was saying that Chinese can't build EV. They did it. They did extraordinarily well.
Yeah,
Asia is very good in technology. There is nothing to do. China, Japan, South Korea, they are extraordinarily good because they are very, very good in math and computing and now in AI. So it's a different story. So I don't think Europe can catch up with China at this level in terms of quality, although tech entrepreneurs in Europe are good, but I think there is a bit of advantage on the Southeast Asia, but we can do our part for sure if we change
no, yeah.
culture.
I have two good questions off that actually. One, without revealing too much information, is there anything that you have has caught your eye in Europe that you're thinking of this is actually worth backing?
Say again?
Is there anything that you actually caught your eye in Europe in terms of you've had access to the founders? Is there anything you're personally thinking, without revealing too much information, that you might have a look at backing?
I mean, there are a few startups, although at the moment I'm not investing because I'm 100% focused on equity match and also raising my VC fund. There are several great startups in Europe, absolutely. But today we need to understand that we have some kind of priorities, and priorities create a market possibility. We need a massive, massive investment in AI models. The problem in
Yeah,
Europe
that's my next
is
question.
we don't create models; we use models. So models are created by the Chinese and by the Americans. And yeah, we have one model I can't remember the name, but the French guy, French startup, Mistral, I believe. But I can be wrong. And yeah, they're the one who are creating. They got pretty much well invested, 100 million, I believe, since day one at the very inception. But again, it's not enough. You need a serious amount of money invested to create a good model that can start competing with Google, ChatGPT, because Meta, because these guys
Are
are already
investors
10, 20 years ahead. I mean, you need to do your market research. You need to understand, and if there is the good opportunity to jump in. But there are few very hot markets now, and for sure AI is one of them. Again, in Europe, we don't develop models, at least for what I can say. We apply models. So Europe, you find more tools, applications for marketing, whatever it is, but not real models, right? I mean, it's pretty clear that the lack of models. I mean, all models work except in China, I believe, works on English. So the only language you can work on models today, I believe, is English. And so, for example, there is one company in Italy that doing something with Italian language. They've done a decent job. But when you go to Europe, you must talk with decents, right? It's be done a decent job. It's okay because the metrics in Europe are just different, are simply different. So again, back to your question. I mean, the opportunities, there are always endless number of opportunities to find the right startup is not easy to evaluate. It's not easy, and also take into account, Albi, that it's not about you, right? You can spot the right guy if you invest very, very early, as I do. But after, you need to support them to get extra money to start finding the market. Unless you are an angel, give them money and just walk away waiting for the return, which is very risky. You need to give them your support in terms of networking, bit of mentoring and knowledge. And who does startups when they become very, very big? They get very much funded at the very beginning. It's very rare that you start with 200K funding and you end up after 3 years with 50 million, 100 million, 200 million funding, because the gap is very big. Normally, this guy, they start with a seed round, pre-seed round, or maybe 10, 20, 30 million. Why? Because there are few investors that back them. Surely they can actually really succeed. Now, that's a kind of snowball. If three big guy walk in, they bring the others, they bring the others, they bring the others. Even if this startup is not great enough, it will become great because this guy bring knowledge, other startups, new CEO, new CTO, and let's move on. This how it works.
really? I mean, it sounds like crypto. When people buy crypto, people just jump on board as well, and then it works in.
Crypto is a different story. Crypto today is like fintech in London in 2010, right? It's an hype. I think it's already finished. I don't know how many cryptocurrencies there are, maybe millions already. Everyone create a cryptocurrency everywhere. When there is so much offer, it's just too much, right? The demand can match the offer in crypto. So, and now we have the United States of America actually they are using crypto as a reserve, which is not good because crypto, when it start to be too much regulated, it lose any form of appetite. Because why should I invest in crypto at this point of my life? What's the point? I prefer to
Yeah.
buy back gold all my life.
You think it's done most of its peaked?
I strongly believe crypto has already reached the peak. Maybe Bitcoin can go to even 1 million. That's a different story. But the cryptocurrency as a market, the peak is reached already in any form.
Yeah. I think people will use it as a tool to, and then just throw it in the bin at some point, right? When they've made their money.
Pure speculation. But everything that is just speculation ends one day, right? Because it must end, because there is no logic behind. So if crypto was done, someone say it's a store of value equal to gold, but the difference is massive. Someone say it's a currency. I still need to understand how can currency fluctuate in 20% in a day. Doesn't make any sense, right? So I'm not going to. If you come to buy, I'm selling cars. You come to buy my car, right? And say get $40,000. You pay or euro. You pay in crypto. Tomorrow the crypto goes down 50%. I have 50,000. I lost 50,000, 20,000. Doesn't make any formal sense. For currency, you must be stable. Currency must be controlled. Otherwise, you just push down as much as you can and try to devaluate your currency as much as you can. Crypto would do the same. So
It sounds like
pure
an element of
speculation.
gambling.
Except Ethereum,
So,
but I think not crypto. I mean, crypto has pretty strong blockchain behind. It's a different story.
no, yeah, understand, man. I'm gonna bring it back a bit to equity match because we have about 5-10 minutes left, so we can end on time. In terms of your vision for the next 6 to 12 months, I know you mentioned this. For you and equity match, are you more focused on expanding the tech side, investor base, or where is your head at?
I mean, we expand on the tech side, absolutely. We keep developing for the next 12, 24 months at least. That's on the tech. We start adopting AI is in few weeks, probably already. We try to adopt AI as much as we can with logic. So where the platform needs, they can strengthen the performance of the platform, of course we will. We will extend the users today, our founders, investor match. We will add also executives. We will add advisors, students in, I mean, postgraduate anyway, even students, they want to start a company. Well-established entrepreneurs to close the loop and something that very strongly can support the founders. Equity match, possibly in 2026, we start investing in startup inside the platform. We will create our own venture capital fund to invest ourselves as well. And we launch our own academy where we allow users to write contents inside to teach the founders. And possibly already next year, we launch a secondary market where we allow anyone invest in equity match to sell and cash out the investment. That's the overall. And of course, as we have 1 million users in next 20, maximum 24 months, there is a lot of work to be done, right? In terms of on board.
That's awesome. It's also got an education course in there, technically,
We do,
where they
indeed.
can learn, right? Like an online university, you could call it,
Yeah, exactly. That's the
something that
concept.
actually applies to real life and can benefit.
That's the concept behind, yeah. I mean, I'm happily married and I'm still waiting for my first child.
That's a
I'm still waiting for my first child. And
okay.
and the rest, I'm very methodic.
Yeah, system mind.
I so I need to I give to myself my 8 hours of sleeping every night. Eat extraordinary healthy. Don't smoke. Don't drink. Do sport. I keep going.
What sport do you do?
I can only do a bit of bodybuilding now because I completely destroyed everything for my past 20 years. But yeah, I loved everything between boxing, karate, kung fu, and football.
Football is great as well. You're on a high. I can imagine you're on a high protein diet.
I am. Not too much now. Used to be a lot.
Yeah. Awesome, Max. This has been a brilliant, man. Thank you so much for your time. You really
Thanks,
got
Tim.
real founder energy, and you've got a massive thing you're building here right now. What I wanted to do for anyone listening, where can they kind of go to connect, pitch, or kind of get involved in what's going on with all the things you're doing?
Yeah, you can follow me on LinkedIn. I mean, all this stuff are there. I don't use X that much now, but also everything we do inside Equity Match because Equity Match works kind of X or LinkedIn. So inside you have the posting, social, everything. So we start doing very soon a lot of social activity inside the platform as well.
Awesome. And finally, I think what's one piece of advice that you give to someone that was in your situation at the start that would help them get to where you are a lot quicker?
It's very, very simple. You must be 100% focused on one thing, one per time. So if you start your company, just be 100% on your company, focus until the company is done. Done means it must be very much creating solid revenue. The company can go without you, and after you can start something different. My problem has been I was starting a company and it's 6 months, so it becomes too challenging, right? And the day arrives when you just can't cope anymore, and something must be closed. You need to give up somewhere. So don't reach the point where you need to give up, right? So and also you need to avoid to become burnout. So that's why I do one per time. I do very well, execute at best possible way, and after we're done, move to the next one. I'm not a big believer of doing this multitasking things. It's just not for me. I don't believe in any multitasking. In entrepreneurship, you must do one thing at a time and very focused. Multitasking, in the end of the day, you do nothing.
There's a trend where people jumping business models constantly because they're pivoting, and they never get anywhere.
Yes, you're right. Then the massive mistake. You need to pivot, right? Absolutely, you need to pivot. When times right, you must pivot. Otherwise, you're going to die. But the point is, if you start something for the sake of making money, I will never ever give money to someone who does something for the sake of making money. Because as you say, they jump from one side to another. Because maybe the investor investing on AI, I'm opening AI. Now, I think the last 100 deck I received, they are AI agent, and they all do the same. And many of them are useless, even when actually working very badly. So what's the point, right? You must have you can't start a company on the trend. You must start a company on what you believe and what you can deliver. If the trend is not yours, okay, that's fine. Wait. By jumping on the trend, it's wrong.
Yeah. Did you say AI agent?
I saw so many. My God, it's unbelievable.
Yeah.
Everyone builds AI agent now for everything, right?
Yeah.
But the point is, again, there is not that massive market adoption today. It's totally true. AI, we just start scratching the surface. We are far away from anything.
Yeah.
Today, AI is used for what? For writing, marketing, images. It's still pretty basic, right? The one who claims this massive AI agent still all must be proved, except for this massive guy who uses billions and billions every day for training the models, right? Who can do this? You must have a trillion company to use billion to only ChatGPT can.
Yeah. That's how the machine learning works. If you don't have the data as well, that model's going nowhere.
I believe data finished, so now you need to create data. And so you work with synthetic data. Synthetic data are synthetic, so they do not reflect reality, they reflect your reality. It's a we are way far away from any real AI. We will get there. And when we get there, it's going to be a massive problem for many. I don't believe this society is ready for this massive disruption. I think people will get depressed, many will lose job, but that's the reality, right? So when Americans talk about bring back production in the US, you must be stupidly ridiculous to believe that you can bring back production. Production will be done by robots in less than 5-10 years. Actually, it's already done by robots, right? What do you want to bring back? You can only move ahead with services and technology now. That's all, period.
I believe what you believe, but
But
also I know that people like to be fed information to ease their mind as well. Yeah.
We were going by 2050. We are going to have an extraordinary smart robots and an extraordinary stupid society.
Yeah.
100%.
No, 100%, man.
This is
Well,
smashed.
hopefully we can jump. The smart ones can jump on board. Fingers crossed.